Hello, hello. Good afternoon. Good afternoon, Facebook. Good afternoon, IG. How are you guys doing out there today? Hope everyone is doing well. I want to welcome you guys on here. Elaine Proby, CEO, Proby's Tax and Accounting. Guys, I own and operate a financial service firm here in Los Angeles for over 35 years. And so today we wanted to, just make sure that you guys are straight on your taxes. We're going to talk about a topic that's going to be very important to a lot of you guys out there. I get these questions all the time. And what we're talking about today, guys, is before you if you got married this year, if you're planning on getting married before the year is out, there's still plenty of time. If you're planning on getting married before the year is out, and we needed to add on there, if you have gotten married this year, everybody wants to know, well, what is the tax effect and how do we need to file and how is this going to matter when I file my taxes next year, guys. So I want you all to stick around to the end. I will let you guys know how this is going to affect your taxes. So one of my favorite conversation with clients, I'm usually having a conference call with couples after they get married as to how they're going to be filing, how is this going to affect their taxes. And the biggest concern is, what happens if he owes money? What happens if I owe money? What happens to a refund? They want to know all this stuff. What happens if there's the garnishment? Am I going to pay more taxes? There's so many questions, guys. So I want to discuss with you guys today. I have couples come to my desk all the time. And the first thing I would advise is, okay, so we probably need to do the taxes separate and let you see how it looks, right? So there's a lot of things that you wind up losing. You wind up losing credits when you file marriage separate. There's credits that you're not able to take. So you wind up losing that stuff. And so I would go ahead. And my favorite thing is go ahead and do the taxes, do them marriage separate so they can see how it looks. And after I would file those taxes and put them in the system and do marriage separate, and they realize if there are dependents involved, they lose the dependent credit. They lose the earned income credit. If there's based on the income, they would lose certain other credits like the tuition credit. If they have any education credit involved, they would lose those credits. And after they realize that they're losing so much credit, and if your income is lower, let's say you made enough money to be able to get earned income credit. If you had dependent qualified kids, guys, when they may be losing those credits as long as they are filing marriage separate. So when I go through this process with the couple and show them how they would wind up paying so much more taxes, then for the most part, at the end of the day, it makes more sense for them to file married filing joint. Okay, so what I'll tell you guys about the filing joint, and then I'll give you guys some some of the things that would affect you despite getting the credit. And at the end here, guys, I just want you all to understand how this is going to matter, because this is the end of the year and you need to know all the stuff about your taxes before you go and get them done. All right. So out of this story is that the credits that they generally will be losing, the most common credit, guys, is the earned income credit. The earned income credit. So based on how much money you make, if you file a married joint and you make up to say $56,000, you can get a maximum of $600 if you have about 3 kids or 3 qualified dependents, right? They don't have to be your kids. 3 qualified dependents. So that's one of the credits that you'll be losing if you don't file married joint. Okay, another credit that's very common is the child independent care credit. Child independent care credit, you would never get that. You will lose that. That's unavailable if you file marriage separate. And then the education credit, which I had mentioned, which is one of the things they ask about, because generally there's 1 or 2 spouses always in school, or maybe a dependent child. And of course, the education credit is another credit that they would be losing, right? And so this is some of the disadvantages if you file marriage separate, which in the example that I gave, for the most part, the couples wind up filing joint return because after how the bottom line is affected. So when you lose out on the education credit and the child care credit, and you could lose out on earned income credit based on your income, and these credits comes right off the tax liability, and for the most part, it's refundable. it's refundable credit. So you don't really want to lose out on good refundable credits at all, if at all possible, right? So that's one of the first things I want to point out, guys, here today. The various tax credits that you would not take advantage of if you file a married separate tax return. Now, keep in mind, there's only the 2 legal status you can file. If you have been married this year in time before or planning on getting married for the years out, legal status is married filing a joint return or married filing separate. Okay, so I want to point out to you guys today 3 different points and different things that they generally discuss and is very concerned about. And again, the tax credit is one of them. And then the second thing, right? Point number 2, I really want to point out here today, guys. Biggest question in all my conversation with a married couple is back taxes. Okay, if one of the spouse owe back taxes, the biggest question is, how is their back taxes going to affect me? And very good question, very serious question, super important. Of how is the other person's back taxes going to affect you? And simply because you're filing a joint return, you are responsible. You are responsible for those back taxes. So that's what happens. So this is how the back tax is going to affect you guys. You're responsible for those back taxes. You have a joint return. So whatever is on the tax return, both of you guys are responsible for it. Hold on one second. Let's see if I'm on IG over here. Live on IG. Hold on one second, guys. Facebook, give me a second. Let me get back on IG so we can make sure that these guys over here get this message there, because we don't want anyone to lose out on it, right? So here we go. All right. So I want to make sure. All right. Want to make sure that everybody gets this there, guys. This is super important. All right. So here, IG, you're live now. I live on IG now. Okay, here we go. And so just to get the guys over here caught up on IG, I just wanted you guys to hear what we were talking about over here on Facebook. I was discussing with the audience over here on Facebook and on YouTube that one of the most important things when 2 people gets married, there's some people who've gotten married this year, and there's other people who, of course, may still be planning to get married because there's a holiday, guys, on Facebook. I just want to focus on IG to get caught up to speed. And one of the biggest concern when people just got married in a year, their biggest concern, guys, like I said, when they come to the desk, they want to know, the story is, should we file a joint return? That's everybody's question. And how is this going to affect me? And then at the end of this conversation, I'll let you guys know how this is all going to affect you, and in some cases how you can get out of some of the tax implication that it may cause. And I'm going to point out those 3 points today, guys. So for the folks over here at IG, the thing about it is the credits that you could lose if you file married separate. And the thing about it is there's only 2 legal status. It's going to be married filing joint, married filing separate. You could lose credits if you file married separate. And what I was explaining over here is most of the credits that you could be losing. Most of the common one is based on your income, would be earned income credit, education credit, child care credit, stuff like that you wind up losing if you file a married separate return. So filing joint, at the end of my conversation with most couples, when I do their taxes separate, at the end of the conversation, most of them, we choose to file a joint return. Okay. All right. So on to my second point, guys, to get caught up, back taxes, which was one of the ones I was talking about. The second point here is everybody wants to know, am I going to be responsible for the other spouse back taxes? Really seriously important topic, because for the most part, a lot of folks owe back taxes for one reason or another. So if you file a joint return, you can be held liable for those back taxes, because your tax return refunds could be levied, could be intercepted for monies owed by the other spouse. So if there's a refund due on a joint return, guys, you may not get it because there's back taxes owed. And of course, you may have nothing to do with those back taxes. And so a lot of couples are concerned about filing joint return because of owing back taxes. At the end of this video, I'll let you guys know how you can get yourself out of that if it has nothing to do with you. All right, so stick around to the end and I'll explain that to you in a little bit. All right, so that's my second point, guys. If you are planning on getting married, or if you just got married this year, and it has to do with how you file your taxes. One of the other points here, the third point, guys, is what about garnishment, child support? Child support, right? That's another big one. Very common. Most people out there has that issue, child support and or student loan, garnishments. Now, are they going to intercept again your tax refund if you do a married filing joint tax return? And yes, your tax refund will be intercepted. And of course, if there is a child support involved, that money will be intercepted and sent to that department. So again, if you have just gotten married and you want to know whether you should file married filing a joint return, some of the cons about it is that you can be held liable for some of these liabilities. And of course, your refund checks will be intercepted if there's monies going out there by either spouse. Okay. So guys, once again, Lynn Proby here from PROBY'S Tax and Accounting. Hi Inez, thanks for jumping on. Hey Lorna, thanks for jumping in. Hi Laverne, hello. Hey Mighty Dre, how are you guys doing? Yes. Tone, hi Took, how are you guys doing? Thanks for jumping on here today. All right. So what I want to talk about on how you can get yourself out of some of this maybe tax problems that has nothing to do with you if you filed a joint return with your spouse. Let's say, how are you responsible for the spouse's taxes over prior years for getting married? Okay, well, the question over here, guess, are you responsible for the spouse taxes owed prior to getting married? So you're not technically responsible for those taxes, but you will wind up paying for those taxes. You're going to be paying for those taxes with refunds. Once you file a joint return, any refunds that's due you on the joint return will be taken towards paying off those back taxes. So this is how you are contributing now, technically being responsible for paying off those back taxes, because they will be taking the refund that both of you would be getting. So instead of you getting your share of that money, it's going to go to pay off those back taxes. So it's a very, very good question. Okay, very good question. All right, so let's see. How about Indira? Thanks for jumping on. Hi, how you doing? Happy holidays to you too. All right. So guys, Elaine Proby here, CEO of PROBY'S Tax and Accounting, and I want to tell you guys now how you can get yourself out of the tax situation that we talked about here, Laverne, that is, in fact, you didn't owe those taxes. You had nothing to do with those taxes. Now you've gotten married in the current year and are still planning to get married. So don't let this deter you. If you're still planning to get married, go ahead and get married. We can take care of the tax situation, okay? And so to not have to pay anything into the back taxes, guys. So this is one of the reasons why sometimes, even though your refund might be less, some of the spouses choose to file separate. They choose to file separate because you might get less money, but then of course they're not mixing up. You're not combining your finances, right? If you happen to file a joint return and your refund is intercepted for a garnishment, child support, or back taxes, as the spouse who did not owe any of those debts, right? You had nothing to do with what happened prior to, you had nothing to do with the taxes they owe. You can get yourself out of it by filing what is called an innocent spouse relief. Okay, so there's a way to get out of this stuff. This is called innocent spouse relief. And what that does is allow you to file a form and let the government know that, look, I have nothing to do with the taxes that they owed before. I have nothing to do with what happened there. I am the innocent spouse in this situation. This is all brand new for me. I'm the innocent spouse in this situation. So what you can do, guys, you can file an innocent spouse relief form and remove that liability from you. And if you can prove what portion of any refund that belonged to you, you can, be able to get that money back. However, you must file an innocent spouse relief because the government has no idea. They just see a joint return comes in, the Social Security number shows up, there's a liability sitting out here, and they'll go ahead and take those funds, right? Okay. So that's it. Any other question? What did you say, right there? The proposed spouse, the taxes. Okay, yeah. So I did answer that question, guys. This is a Q&A again here. This is year-end tax planning, and you guys want to make sure that you are you stay in front of all this stuff, because at the end of the year, if there's something that you needed to know prior to the year rolling out before tax season, I want you guys to realize that you can give us a call here at PROBY'S Tax and Accounting. We may have limited hours during the holidays, but you feel free to send us an email. Send us an email. Here's another question. Does it matter? Let's see. Does it matter when I get married in the tax year? All right, that's a very good question, guys. Does it matter when I get married in the tax year? No. As long as you are married within the tax year, you can legally file a married joint return. So if you guys decide to get married at the end of the year, that's perfectly fine as well. Anytime during the year, you don't have to be married for the full year to be able to claim the married filing joint return, if in fact that's the status, which is the most favorable. And again, I generally do, when the clients come to the desk, and like I said, we discuss it, I generally go ahead and they file it separate. And then when they see what damage that does, all the credits that they lose, we wind up filing a joint return anyway. That is the most favorable, unless, of course, you want to keep your finances separate. All right. So, hi, thanks for joining. Yeah, so that's a very good question, Lee. It doesn't matter what time you get married in the year. Okay, so guys, PROBY'S Tax and Accounting Service here in LA, or phones will be on limited service between the Christmas and the New Year's. However, you guys can still call, leave us messages, and or send us an email if you have any concerns before the year end that you wanted to make sure that you're on top of. Again, we want to make sure that you save as much money as you can, you pay in as little taxes as you can. And again, you can go ahead and get married if you plan to do so for the years out, guys, so we could take care of that tax problem for you, okay, if you have one. If not, we're going to make sure that you file the most favorable way to give you the most money back. And then if there is an innocent spouse situation, we'll take care of that for you as well. All right. So I think I covered the questions over here. I want to thank you guys, Laverne, Indira, Lee. Thanks for jumping on over here. Marty Dre, thank you guys for jumping on as well. And you guys, this is probably the our final session on tax planning for the year. Of course, we'll be back, say, next week, if in fact we are going to have some good news on the stimulus package, which I'm anticipating is going to pass before the break for the recess tomorrow night. So we might be discussing that as well. Again, I want to thank all you guys for supporting, and all of the clients out there. We want to thank all you guys for being a client at PROBY'S Tax and Accounting. Share this information, share this video, and make sure that all your friends take advantage of this as well. All right. So guys, we will see you back here probably before the holidays with good news on the stimulus package as well. If not, again, hit us up, PROBY'S Tax and Accounting, 323-290-9034, or go to our website, probystax.com. All of our services are on there. We specialize in income taxes, accounting, entity formation. If you guys want to get an entity form and you want to maybe try to get it before the year is out, you can give us a call, have a consultation with me. You have 15 minutes free, and see if you want to make sure to make that happen before the year's out. Okay, we're here to help you and make sure that you guys keep all the money in your pocket that you work for. All right, so I will see you guys back here soon, and next week. And you guys take care of yourself, stay safe, take care of each other, and have a wonderful and blessed day. So I'll see you guys back here. Thank you. Bye-bye.